The week ahead. Trading in the present tense with an eye on the future. Successful day trading is mentally challenging. The biggest challenge for many of us is recognizing that the underlying structure has deteriorated or is in the process of deteriorating. This is like trading on very thin ice. Yet laggard momentum traders, focusing only on price, continue to advance price without realizing the risk that they're assuming. This is like driving your car or your motorcycle looking only straight ahead. 2 weeks ago, in the week ahead, I wrote that the odds of retracing the range from the previous week were very high. That didn't happen. Why didn't it happen? Because the momentum traders continued to take the market higher. Last week, I wrote that the way to protect yourself from these pronouncements, i.e. when I was wrong or it didn't turn out as soon as expected, is to focus on developing value. Value represents what is occurring right now. During the past week, the previous week and a large portion of the prior week were retraced. The odds caught up with the market. We have consistently spoken and written about two observations. One, there is often less risk in being a little late rather than striving to be early. When momentum markets become too enthusiastic, which is the second thing we write about, it often takes a catalyst to get traders' attention. Last week's catalyst was traders' nervousness relative to some of the rhetoric coming out of the Republican National Convention. In the following graphic, you can observe two closely aligned days with no excess. Excess is one of the most important elements of market-generated information. The lack of excess heavily influenced my observation that the odds of retracement were high. The retracement finally came. However, it was a week later than initially written about. Part of successful trading is, one, understanding what is going on, and secondly, having the patience to let it work out. When the market advances without following an excess low, it often indicates that the buying comes from very late laggard momentum traders. We often refer to these as weak hands buyers. The following graphic shows the gap/5500 level, which is the next lower support level. The trading issue is whether the market finds acceptance or gets rejected relative to the 5500 level/gap. On a longer term basis, I suspect that we are currently witnessing a liquidating break rather than a full-scale rout. This comment is based on the current high's lack of immediate aggressive selling. Selling got underway slowly and built from there. Sometimes markets must break before they continue to increase as short-term inventory has become extremely high. Under the current situations, we talked about the importance of excess. Whether this market continues or gives us an excess low is what you want to focus on. As I said earlier, the immediate focus will be the 5500 level, which was also the gap. Good trading. Have a great week.